Most people are not bad with money. They are just scared of investing. And honestly, that fear makes complete sense. You worked hard for every dollar in your account. The idea of putting it somewhere that could drop 20% overnight feels reckless. It feels like gambling. So you leave it in savings. You tell yourself you will start later, and later never comes. But here is what nobody tells you. The fear is not the real problem. The real problem is that you are trying to invest without a system. And trying to do anything scary without a system will always feel overwhelming. Today, I am going to show you the exact system that removes the fear and makes investing feel like something you actually control. It is called the Calm Capital System. And once it is running, you will wonder why you waited this long. But first, let us talk about why most people stay stuck. When the average person thinks about investing, they picture a trader staring at screens, watching red and green numbers flash in real time, making split-second decisions with thousands of dollars. That image alone is enough to make anyone want to close the tab. The second thing that stops people is information overload. You search how to start investing, and within 10 minutes, you are drowning in options. Stocks, ETFs, index funds, crypto, REITs, bonds, Roth IRA, brokerage accounts, dividend investing. Your brain shuts down, decision paralysis sets in, and you go back to doing nothing. Here is the uncomfortable truth. Doing nothing is not the safe option. Every month your money sits in a savings account, earning 1 or 2%. Inflation is quietly eating its value. In 10 years, the cost of doing nothing will be far more painful than any short-term market dip you were afraid of. That is why you need the Calm Capital System. 4 steps, simple structure, removes the guesswork entirely. Step 1. Protect before you invest. Before a single dollar goes into the market, you need to know your foundation is solid. That means having 3 to 6 months of living expenses sitting in a high-yield savings account that you do not touch. This step is not optional. This is what keeps you from panic selling your investments the moment your car breaks down or you lose a client. Most people skip this and then wonder why investing feels so stressful. It feels stressful because you're investing money you might actually need. Protect your foundation first, then invest. Step 2. Use one simple account. Do not overcomplicate this. Open one investment account to start. If your employer offers a 401k with any kind of match, start there and contribute at least enough to capture the full match. That is an instant return on your money before the market does anything. If you do not have a 401k, open a Roth IRA. It takes about 15 minutes online. You invest after-tax dollars today. And every dollar that grows inside it is completely tax-free when you retire. One account, one decision, no complexity. Step 3. Buy boring on purpose. This is the step most beginners get wrong. They start with the right intentions and then get pulled toward exciting individual stocks, trending sectors, or whatever is dominating financial news that week. Do not do that. Your first investment should be the most boring option available. A broad market index fund that tracks the S&P 500. Here is why. Instead of betting on one company being a winner, you are buying a tiny slice of the 500 largest companies in the country all at once. When one drops, others carry the weight. Over the last 100 years, the S&P 500 has averaged roughly 10% annual returns. It has crashed, it has recovered, it has crashed again. And every single time it has come back higher. Buy boring, stay boring, let time do the work. Step 4. Automate and disappear. This is the most powerful step and the one most people skip. Set up an automatic monthly transfer from your bank account into your investment account on the same day every month. Even if it is $50, even if it is $100, the amount matters less than the habit. Here is why automation changes everything. When you invest manually, your emotions get involved. You check the market, it is down. You hesitate. You wait for a better time that never feels like the right time. When you automate, the money moves before your brain has a chance to second guess it. You stop watching the market every day because the system is handling it without you. This is called dollar cost averaging. You buy more shares when prices are low and fewer when prices are high, without ever having to make that decision yourself. And here is what happens after the system is running. The first month feels strange. You will check your account more than you should. The second month feels normal. By the third month, you stop thinking about it. 6 months in, you will look at your balance and feel something you never expected to feel about investing. Calm, not excitement, not anxiety. Calm. Because the system is working quietly in the background while you live your life. The market will dip, your balance will drop sometimes. And instead of panicking, you will remember that a dip just means your automatic investment that month bought more shares at a discount. The fear of investing does not come from the market. It comes from the feeling of having no control. The Calm Capital system gives you that control back. Protect your foundation. Use one account. Buy boring. Automate and disappear. Start today, even small. The only move that does not work is the one you never make.